Today's hot topics at a glance. Bitcoin's short to medium-term pressure remains very high. Stablecoins have seen their yields cut by White House regulation. Solana's retail investors are retreating. Has Solana's price bottomed out? At what price can you enter the market? Monday, January 19th. This is BitcoinTV Chinese channel by Lian Heizai. I'm Michael. I announce the date at the start of every day. And I don't know if you feel it, but time really flies. 2026 is not only here, but 19 days have already passed. Our show's subscriber growth has been incredibly fast lately. It took us 6 years to go from 0 to 100,000 subscribers on YouTube, but going from 100,000 to 200,000 happened in just a few months. I don't know what YouTube's recommendation logic is, and we don't know exactly what happened. But I believe we must have done something right. To all the friends who just started following this channel, BitcoinTV is here to help you sort through all the key news in the Web3 world every day. Small things in big projects, big things in small projects, and the news that brings your wallet closest to making money. They say you can't make money beyond your level of understanding, and this is where we help you raise that level. So our show basically has no fluff, but it's always the truth, always the facts. All right, our headline segment aims to let everyone quickly browse what happened in the crypto world over the last 24 hours in just 3 to 5 minutes. Okay, let's look at the most important data headline. The UTXO realized price isn't for predicting if it'll go up or not, but to see how much people who bought at different times can mentally endure. That's the essence of this indicator, where the cost line is and also where the psychological bottom line lies. So it's not that the risk is gone, but that different people are now carrying it. Let's look at the specific data. 95,600 is the current price. The purchase price for those in the last 1 to 3 months is between 80,000 and 90,000. So this group has a very stable mindset. The cost for holders from 3 months to a year is between 100,000 and 110,000. Indeed, this group is stuck, but they haven't reached the point of despair where they panic sell and dump their chips. So we have the current situation. When it drops, someone supports it. When it rises, someone sells. So the key next is to see how the price moves. If it can rise to around 100,000, which is the cost line for those who've held for 6 to 12 months, then the selling pressure from trapped positions will be much lower. But if the price lingers below their cost line for a long time and fails to rise, people will gradually feel that holding is useless. At that point, even if the price hasn't dropped much, this group won't be able to resist selling. To summarize, it's not that the risk is over, but that it's frozen in the hands of medium-term holders with the explosion delayed. So whether it goes up or down next depends on these holders stuck for 3 months to a year, whether they think they bought wrong or if it's just a temporary pullback, and whether they'll give in. In our members-only weekly review that ended at 8 a.m. today, we've already provided our channel's own judgment. I hope it helps with your trading. Okay, let's look at the period before this rebound. The STHSO par for short-term holders stayed below 1.0 for a long time, even dropping to the 0.95 capitulation zone at one point. This historical level is basically where everyone is collectively cutting losses and risk is being rapidly liquidated. This shows that short-term players before the rebound actually had their losing positions. It's already been settled, and the selling pressure was absorbed a while ago. Later, the SOPR was quickly pulled back above 1.0, which means the phase where short-term holders were selling at a loss is over. The market has returned to a break-even or even slightly profitable state of recovery. But to be clear, this is more like a buffer after clearing out weak hands, and definitely not a signal that the market is about to take off. Whether the price can continue to rise depends on whether the SOPR can stay above 1.0. If it drops below 1 again and fails to recover, then we'll have to reevaluate this entire rebound. Alright, for Bitcoin right now, the price is still determined by futures. The open interest index is like a thermometer that shows if the market still dares to add more leverage. Looking at Binance, they hold about 36% of the open interest, making it the hub of market sentiment. From the peak, the price fell about 36%, and the OI shrank from 381,000 to 314,000 Bitcoin, a cut of about 17.5%. What does this mean? Everyone is deleveraging to survive. This looks almost identical to April 2025. Back then, the OI stabilized around 300,000 Bitcoin. Binance's share dropped to about 26%, and then 80,000 Bitcoin of leverage was added back before the price took off. Now the OI is recovering, but very slowly, and we're nowhere near going all in on leverage yet. So this time, it's more like a healthy rebound after a shakeout. The direction isn't bad, but it's not a trend reversal yet. Alright, after looking at the data, let's move on to the news. For our show, we want to ensure that both visually and audibly, The information we provide in these 15 minutes is rich enough that just a glance at the headlines tells you what's happening. That's the main goal of subscribing and hitting that notification bell. So even if you don't have 15 minutes, a quick look at the titles gives you enough to talk about all day. Okay, our top news story is a big one, the Clarity Act. I know there's been a lot of reporting on the Clarity Act since last year, but most people treat it like a gray rhino. They know it's there, but few are actually watching it closely. It seems the Clarity Act might face some hurdles. Why? The most important point is that if crypto becomes legal and you can actually generate interest just by holding it, think about it. Traditional banks would be turned upside down. Who would want to deal with an arrogant teller sipping coffee and asking, "Where did this money come from? Why are you depositing this? What's this withdrawal for?" Who needs that, right? So, the conflict between traditional banks and crypto platforms will be ignited if this bill passes. On the surface, they're merging and shaking hands, but under the table, they're kicking each other harder and harder. So, I think it'll be tough for this regulatory bill to pass anytime soon.
Reports suggest the White House is weighing whether to pull its support for the Clarity Act. The core of the dispute is Coinbase's new stablecoin yield protocol. Sources say it lacks prior coordination but is already live, putting pressure on regulators and the banking system. It's being called a rug pull on regulatory consensus, sparking a sharp policy shift.
So we need to have a clear path for people to register crypto securities. There's disclosures to figure out. There's, how do you make sure that these are accredited investors when they need that? And so we, along with the rest of the crypto industry, are working on ways to do that.
The White House stated this is President Trump's bill, not Brian Armstrong's, clearly drawing a line on who is in control. Against this backdrop, Democrats and several crypto firms are back at the table, but Coinbase was pointedly excluded, making stablecoin yield terms a key variable in the new talks.
So, looking at the news, this isn't about whether interest should be paid or how much. Looking at the whole story, it's really a fight for industry influence. Coinbase has already been sidelined in the second round of discussions. The White House's message is clear. You can innovate and shake up finance all you want. But when it comes to legislation, don't try to do my job for me. So the outcome is quite pragmatic. Stablecoin legislation is still controlled by Wall Street, traditional capital, and the White House. Once this framework and law are passed, whether stablecoins can even earn a yield remains a big question mark. What we really need to watch isn't the yield terms, but whether crypto assets can earn a seat at the table of mainstream finance in the future. In 2025, Solana was arguably the star of the public chains. Look at the trading volume up, traffic up, the narrative up, starting with the spark from Trump's meme coins, Pump.Fun, Radium, and Jupiter pushed retail sentiment to the absolute limit. On our channel alone, a search for Solana brings up 179 reports, but by year-end, Solana's traffic seemed to be receding. It's not that the chain is broken, but rather that the speculative money seems to be pulling out. So everyone should keep a close eye on Solana's fourth quarter data.
Fourth quarter data shows Solana's real economic momentum has weakened significantly. MEV fell 43% quarter over quarter to $91.1 million. The real on-chain yield is only 0.46% annualized. The drop in MEV share means on-chain gaming and speculation are receding together. In terms of valuation, SOL's MVRV has fallen back to 0.95, with the price below the realized price of about $145. Based on historical trends, there's still a chance it could retest $90 to $110 and challenge the 200-week moving average at $103.
So it's not that Solana is finished, but in the short term, its revenue is being propped up by retail trading. Now that the market has cooled, attention has faded, and memes aren't working, the pressure is naturally immense. But if Solana wants to truly transition from a speculative chain to a serious industrial one, it has a long way to go. If Solana's price drops to around 127, it might be a good opportunity for a short-term trade. You can sell when it rises to around 145, buy low and sell high in the short term for a quick trade. Can we expect de-dollarization with multiple countries joining forces on mBridge for cross-border payments? Pantera has locked in a $26 billion opportunity, and institutional layouts for 2026 are more accurate than K-lines. How should we understand this mBridge? I just want to point out a realistic issue. The volume of the renminbi ranks among the top 3 globally, yet among the top 50 currencies in the global fiat system, it's the only one that cannot be freely exchanged or traded. So if we were to use the renminbi for oil trading, or as an oil trading pair, any country wanting to trade with China would have to specifically buy renminbi using their dollars or gold to stockpile it. However, this renminbi cannot circulate freely. You can only use it to trade oil with China alone. Therefore, for sovereign states, the opportunity cost of holding renminbi is extremely high. How many countries are willing to use their foreign exchange reserves to hold a currency that doesn't circulate? We have to question that. So, can the digital renminbi break this barrier? Let's ask ourselves 3 questions. First, can it be freely exchanged? Second, must every transaction be reported to China's central bank? Third, can its exchange rate float freely? You'll likely have your answer then.
Data shows that mBridge's progress has significantly exceeded market expectations. The Atlantic Council revealed it has processed over 4,000 cross-border transactions, totaling $55 billion. This is a nearly 2,500-fold increase from the 2022 pilot phase. Currently being tested by the central banks of mainland China, Hong Kong, Thailand, the UAE, and Saudi Arabia, the digital renminbi dominates with a 95.3% settlement share.
Personally, if you ask me, I think the objective of expediting cross-border payment could be easier to achieve through building new platforms rather than, recalibrating or linking existing ones. Because as we all know, existing local payment systems, they are usually entrenched in, addressing very unique, jurisdictional requirements. So I think the metaphor that I have been using quite often to describe the situation is that we now have the right soil.
In China, the digital renminbi is growing fast. By November 2025, total transactions hit 3.4 billion, worth 16.7 trillion yuan, up over 800% from 2023. And since January this year, interest has been paid on real-name wallets, marking its upgrade from a payment tool to a currency form with reserve deposit attributes.
All right, since Russia invaded Ukraine and was kicked out of the SWIFT system, they began establishing their own domestic or international settlement systems. China has its own, and the UAE has its own as well. Every region or central bank wants to create its own settlement system. Now China has made a new move. The central bank-led mBridge is an innovative player in the international settlement arena. What does it mean? It means using central bank digital currencies or CBDCs for peer-to-peer settlements. This bypasses traditional US dollar channels. After all, the old dollar clearing process is costly and highly susceptible to geopolitical interference. So, since the mBridge project launched in 2021, it has been steadily progressing within the Bank for International Settlements Innovation Hub. In the 2026 crypto world, the narrative is shifting toward institutional dominance. So we need to watch these institutions closely to see what they're up to behind the scenes. Today, let's look at Pantera Capital. This firm was founded back in 2003. They went all in on crypto in 2021 and are true veterans in the space. Now, during this major market shakeup, it's the perfect time for reshuffling and repositioning. The moves of Pantera and other top firms are often more reliable than just watching charts. They're full of profit signals. So, let's dive into Pantera's 2025 performance report.
Pantera completed 31 venture rounds this year, with 21 new investments and 10 follow-ons. They led 85% of the new projects, which is rare in crypto. As of January 2026, their portfolio includes 265 companies, spanning 8 countries across 4 major regions. 4 portfolio companies have IPO'd with a total market cap of $33 billion, including top firms like Circle and Gemini.
Blockchain will be, I think, like 10x higher in 5 years than it is today. And so when it goes down 85%, yeah, it's not fun. You don't feel smart. It's not fun. But I think it's inevitable that it will do well.
Additionally, Bitstamp, acquired by Robinhood for $200 million, is a veteran exchange Pantera invested in back in 2014, holding over 50 global licenses. With over $26 billion flowing into the DAT market, they've perfectly timed this trend.
So, when reviewing Pantera's report, we must look at the direction and the underlying implications. What did Pantera buy with 33.9% of their funds? Crypto infrastructure, mostly Ethereum, but also Solana. They're also doubling down on the AI robotics sector. Now, the US is undoubtedly becoming the global hub for crypto innovation, especially with Trump's regulatory global strategy. So, 4 of their portfolio companies have successfully IPO'd in the US. This leads me to a conclusion. What is the narrative for 2026? At least for capital, it's creating assets in crypto, then folding them into US-listed companies for an IPO. Because the depth and breadth of traditional markets and capital are orders of magnitude greater than crypto. So, understanding this trend for 2026, we must adjust our investment strategies to stay ahead. Now let's look at today's news flash.
The FTX payout process is proving difficult. Sunil says some who passed KYC are still being grilled about 10-year histories and trade details, while others are stuck in review. Remember to complete your KYC and W-8 forms by February 14th. VPN and distribution proxies all set. Otherwise, you'll keep waiting for the money. Now, writing articles on X can actually make money. But the premise is very realistic. You must first decide who you're writing for, support content with facts, and cut out the fluff. Then streamline subscriptions and distribution, otherwise even with doubled returns, it won't be your turn. Ethereum founder Vitalik Buterin stated on X that by 2026, self-sovereignty and trustlessness must be reclaimed. Because over these 10 years, infrastructure has become more convenient, but also more like centralized platforms. It's already starting to drift. Michael Saylor laid the ledger directly on the table. MicroStrategy's website launched BTC Yield. This metric subtracts debt and preferred stock from Bitcoin reserves, adds dollar reserves, and divides by market cap to see how much Bitcoin the company actually has left. Is it enough to cover the market value? At today's opening, gold and silver took off. Silver hit $93.69, a record high, rising over 4% in a day. Gold wasn't far behind, reaching $4,690, a 2% increase, both marking new highs on the board.
All right, Jing Li Ta, we monitor the news daily for you, hoping to enhance your understanding. Many entering the crypto market first ask, what should I buy to see gains? What will bring me financial freedom? But you must realize that what truly keeps you in this market long-term isn't any single coin, but your cognitive framework of the market. Making money is a byproduct of realizing your understanding. So remember, understanding is your only capital that won't be liquidated. Markets rise and fall, narratives shift, and cycles repeat, but your ability to grasp risk, cycles, structure, and human nature will grow through the compounding interest of each market round. Money made by luck will eventually be taken away by the next misunderstanding. Long-term profits come from your evolving understanding of how the world works and your deepening insight into the crypto space. Adjusting your investment strategy. The market never rewards the merely diligent. It only rewards those who understand the rules. When you shift focus from chasing opportunities and surges to modifying system rules, you'll find opportunities are never lacking. The power of choice is the true advantage. Like this if you agree. Well, that's all for today's show. Here are the membership benefits. We hope you'll join. Gold members get exclusive weekly reviews every Monday at 8 a.m. So far, our weekly reviews haven't missed a beat. We always seem to hit the mark. Let's keep grinding and get rich slowly. See you tomorrow.